Welcome to Coffee Meets Cloud, where three women in tech come together to share real stories about leadership, life, and everything in between. Join our hosts, Karami McCollum.
Oh, I love the voice note feature, y'all.
Cassandra Parker.
I'm hanging in there like a hair in a biscuit.
And Rachel Rogers.
We have the power to change it.
Your go-to source for candid conversations and unfiltered insights. So, grab your coffee, pull up a chair, and join the chaos.
Welcome back to another episode of Coffee Meets Cloud. Good morning, good afternoon, good evening. We're back together. It feels longer. I think we've had a bit of like a longer span based on the timing between the last one and this one.
We have.
It's been a minute. Happy Tuesday.
It's because you were gone. And so we couldn't record last week like we normally do.
Well, not only, I feel like I've lived like 9 lives in that last week, but happy Tuesday. You know what they say about Tuesday, right?
Today's not, it's what, Monday? No, it's Monday's ugly stepsister.
Monday's ugly stepsister.
Yeah, that's what it is.
But
that's
you're tuning into us, so naturally it's about to get better.
Yeah. That's right.
Well, you guys probably thought it would never happen again, but here we are with another guest episode. It's been
a long time.
Yeah, today we are joined by an excellent guest. I'm going to turn it over to Cassandra.
Awesome. Well, welcome to our first guest episode in a minute. Total transparency. I've been in charge of getting guests on, and I've epic failed at life. So, but look, we have a dear friend of mine on the podcast today. So let me tell you a little bit about my friend Mark. Mark Irwin knows insurance, but most importantly, he knows people. As the owner of a farmer's insurance agency here in the lovely town of Calhoun, where I live, Mark works closely with individuals and families to help them protect what matters most, from their homes and businesses to their long-term financial security. What sets him apart is his ability to help people understand why their coverage matters, not just what they have. Over the years, Mark has seen firsthand how many people unknowingly rely on employer-provided benefits as their only safety net, only to realize that those benefits do not always follow them when life changes. He is a passionate person about helping people take ownership of their protection, build stability outside of their employer, and make confident decisions about their future. Welcome to the show, Mr. Mark Irwin.
Yay! Welcome to the show. It's so good to finally meet you. I've heard a lot of great things about you, and you are just as hilarious as I've heard.
Well, we won't go over those jokes, but yeah, I get added here when the first thing I hear is, "Well, it's terrible Tuesday." Yeah. But let's have him on. It's terrible Tuesday. What was that again?
No.
Monday's ugly stepsister? Is that what
Tuesday's Monday's ugly stepsister.
I have never heard that. But then you get the hump day Wednesday. So
it's all downhill after that one. Yeah.
So
yeah.
Is Thursday anything?
Almost Friday.
Thirsty Thursday. That's the only one I know of.
Okay.
A lot of people call it Friday Eve.
Yes.
They're just
so
trying
that
to
would make
Friday.
That would make Friday, or that could make Wednesday Friday Eve. Like Christmas Eve from Friends. Okay. Anyway,
y'all, we're just wishing our life away, looking forward to it. Every next weekend. We're like, oh man, just 4 more days, 3 more
But the
days.
weekend just flies by, and it's just, anyway.
Then we buy a burial plot. There we go.
Yeah. We all end up, Why are we in such a hurry? I don't know.
I don't know why we're in such a hurry. Okay, let's get to know Mark a little bit more. Mark, as this is Coffee Meets Cloud, I know you, but the rest of the people don't. Mark is always drinking coffee. So, Mark, why don't you tell all of our listeners about your caffeinated beverage of choice?
It is a iced coffee. Mm-hmm. And I know most people go Dunkin' or 7 Brew, which those are good, but I make my own, literally. Mm-hmm. I mean, we'll pass up. My wife will say, hey, let's stop at Dunkin', and she'll get one. I'll say, well, I'll just wait till I get home to make my own. Because, A, they don't put enough creamer in it, and B, it has to be Starbucks cold brew coffee, iced coffee, with, can we do commercial plugs? Sorry.
You plug whatever you want. We're trying to get sponsored. Yeah.
Okay. And then it has to be International Delight Caramel Macchiato Creamer. It's the only thing that exists. Okay. And it's like 2/3 creamer, 1/3 coffee. And then that's my coffee of choice.
Mark,
have you reached now? And maybe a couple more times a day. And that's why it's so hard. Even with Zep Bay on, it's hard to lose weight because of my iced coffee fetish. But there we go.
Yeah. You drink your calories, it's a bad deal.
I do. It's horrible.
It happens.
That was number one thing when you're trying to lose weight. Don't drink calories. And I'm like, no.
If you ever really pay attention to those things, like the worst thing they ever did was start teaching us to look at the serving sizes, because like,
oh yeah,
you think, oh, I'm just dashing this stuff in, no big deal, and then you're like, wait a minute, one
I just use half a
tablespoon is
gallon.
a serving size? Holy moly, I just did half a cup.
It's like 1 tablespoon is 5,000 calories, and you're like, going, well, it has about a couple tablespoons. Maybe that's all. Then when you actually measure it out, I was like, wow, that was 8 tablespoons. Wow, that's great. Good to know.
But I totally understand what you're saying, because I've gotten to where I'll drink Starbucks. If it comes down to Starbucks or Dunkin', I'm going to go Starbucks. But I really much prefer what I have at home. I've been gone for the last week, and coming home, that was what I woke up this morning. This sounds so silly. My eyes opened and I was like, oh, I'm about to go make some coffee. It's about to be mine.
Yes.
Are you gonna make coffee, or is Jessica
I did.
gonna make your
I'll
coffee?
have you know. Okay, I need to set this record straight, because y'all aren't even gonna believe it. For the last at least month, I have been making my own coffee in the morning, because I don't want to wait. It's not really. It's like a necessity thing. She doesn't get up till 7, and I'm up at 6, and I need something. I can't wait an hour for coffee. So but if it comes down to messing with the buttons on that machine, if it has to be recalibrated or whatever, because we have a new bean, you can forget it. I got to wait on her. I don't know nothing about that, but I can press the buttons. Yeah.
You can do it yourself.
I can do it myself.
I pay the lovely folks at Starbucks to make mine exactly how I want it. That's what I'm having.
Well, now here's the crazy thing. I'm not a Starbucks fan of their coffee.
But the cold brew.
It's just the cold brew iced coffee that you get in the thing at the Walmart.
Oh, it's already pre-made.
Yeah, it's already pre. Yeah, I mean, if I'm going to go and get a coffee somewhere, Starbucks is the last place, because it's too strong or something.
It's too unreliable is my biggest problem.
Yeah, it's never the same.
It's either going to be really great or it's going to be really terrible, and there's really no in between. Yeah.
But I've tried other of the cold brew coffees in a jug, and none of them come close to the Starbucks of giving you a coffee taste, but not weird. I guess.
Starbucks, can you hear us? Sponsor us, Starbucks. Sponsor us.
I meant no offense by what I said. There's just some of your locations that don't know what they're doing, but that's not your fault.
It's not okay, this is random, and we're gonna get back on topic in just a second, but it's like Chick-fil-A. You can go to any Chick-fil-A, it's gonna be the same. 100% exactly the same. Doesn't matter, period. Period. Starbucks, it's a big question. It could be the same. It could be totally different. The one out in San Diego, my coffee tastes totally different than the one here in Calhoun. I don't know. Let's get it consistent, people. Consistency is key.
Mm-hmm.
Yeah, absolutely. That's with all fast foods, 100%. I've always said that. It's like, why do people go back to Starbucks? I mean, to Chick-fil-A all the time? It's like, well, I mean, I have an agent that works for me, and every time I bet, well, you want anything? And I want this. I don't know. No. Well, I'll go to Chick-fil-A just simply because they know that it's going to be the same thing they've got before.
Yeah.
It's like,
it's always good.
There's always that one bad experience in every other restaurant, that's like, oh yeah, that time that I got the hamburger with no meat in it, or I got, blah, 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 blah. And that's never happened at Chick-fil-A. Yeah.
Shout out to the Lord's Chicken.
Yeah.
That stuff is fried in anointing oil.
Yeah, you'll have someone now that comes on here and say, well, the time was one time at Chick-fil-A. You know what? They threw my chicken at me through the window,
But they said it was their pleasure to do it.
That's right.
My pleasure.
Okay. Well, speaking of food, let's roll to the next question for you, Mark. What is your favorite comfort food? Something you could eat every day of your life. Put coffee on the shelf. We know you could drink coffee 24/7, but one thing that you could eat for the rest of your life and never get tired of every day.
Oh my goodness. I weigh 330, so the list is huge. So
oh my gosh.
There's not a lot of exclusionary tactics here. No pork. I'm not a big pork fan. Let's give it that. Let me ask you that. Is it better that I just do the things we won't eat? But no, I one thing that every day I could eat. Oh my goodness. I love granola. That's weird.
That's very weird.
That is not what I would.
You eat a lot of popcorn.
Popcorn, absolutely. Yeah, popcorn. Now I've dialed that back just simply because I realized how many calories that have and how much you could eat at one sitting. Yeah, yeah. But yes, popcorn, absolutely. Peanut butter is one of those that, again, I have to put in the counter just to try not to touch, because if I ever get started, it's like a crack addict. It's like peanut butter all around. Got any more of that peanut butter?
He's been in the peanut butter.
He's got the round circle around his mouth from the jar.
Who needs a spoon?
Like a dog.
Do we call a 1-800 number? Yeah.
Oh, Lord have mercy.
My name's Mark.
And I'm a peanut butteraholic.
I'm a peanut butteraholic. Yeah.
Oh, Lord.
Yeah, I mean, I don't have anything really like a go-to that I make cheese quesadillas a lot at the house. So if I ever
He makes good cheesecakes too.
Cheese quesadillas,
cheese
literally, with that the good white cheese that you get. Ooh, I found they have that the like, what's it called? Cheese? I don't know. Chichua cheese or whatever, or whatever.
Cotija cheese.
I don't know. It's like the stuff they use it like at a real Mexican restaurant.
Yeah.
Oh, you're talking about that like queso, the one that's like the quesadilla cheese that melts really well. You're not talking about cotija cheese is like Mexican Parmesan cheese. That's crumbly.
Yeah. But if I ever like at the house, and I'm what am I going to eat? I'll always go to that. I'll always go to do that with one of the keto little wraps and make me a tortilla.
There you go.
And maybe put some pepperoni in it. I know that's probably weird, but
that's not weird.
No,
I mean it's a meat.
I mean I think that's like the cousin to what's the meat you get in a lot of Hispanic
like chorizo?
Yeah. I feel like pepperoni's kind of a cousin to that.
I mean,
I can kind of see it. A little bit of spice or whatever. Yeah.
Yeah, my wife likes the pepperoni and eggs. I mean, it's like scrambled eggs.
Oh, that's weird.
Tried that.
Well,
yeah, that's kind of.
It's actually pretty good. I mean, if I eat eggs scrambled, I'll sometimes put it in mine, sometimes I won't. But
listen, I'm not judging because I'm from the country. I'm not just from the South. I'm from the country. We will slice a weenie in half and fry that thing up to go with.
Oh, it's good.
You know what I'm saying? It is good. It's got to be the McEvers too. It can't be all beef. It needs to be every part of that animal rolled into one. Yeah.
Are they red? Are these the red?
Yep. If it's not a red weenie, I don't want it.
No.
Now, if I'm eating a hot dog like a hot dog, it needs to be all beef. Like in a bun, I need an all beef hot dog. But if I'm frying that thing up,
so your country, like what state country?
I'm from here, but I'm from Northeast. So y'all are Northwest. I'm Northeast.
I'm Alabama country.
He's Alabama country.
Alabama. Oh, okay, yeah.
Mark's a special kind of country.
Okay. Do you know?
Family get-togethers was a dating event. Okay, so.
Oh my goodness. Well, because I'm from like a rural area in the state. I mean, obviously I have an accent. I've heard it my whole life, especially since joining corporate America. But I never realized until I ran into a neighbor of ours down at the mailboxes a couple weeks ago, and he was like, "By the way, where are y'all from? Are you from?" And I said, Northeast, and he was like, "Oh, really? Well, listening to you talk, I would have thought you're from South Carolina." And I didn't realize that South Carolina had its own accent, but it makes sense because we were basically at the South Carolina line where we grew up. I was like, there you go. Who knew? So maybe I should say I'm from South Carolina.
Mark's deep down in Alabama. Deep.
Roll Tide.
So, but then you moved to Georgia.
Get that in.
Roll Tide. And of course, anytime you're at any event where there's music, you got to holler "Free Bird." Okay.
Oh yeah. Well, that leads us into Mark's origin story. So, Mark, tell us a little bit about. I mean, you can tell us about where you grew up in Alabama if you want to, but I mean, don't go all the way back to birth. But tell us a little bit about. We might be here for a hot minute. I was born on a cold Tuesday morning in lower Alabama. No.
I can tell you a story, but I'm not going to go there about my birth. But anyway, no, I was born in Alabama, Anniston, Alabama, halfway between Birmingham and Atlanta on Highway 20. Most people go, "Where's that at?" And I'll always say it's about 15 miles from the Talladega racetrack. Most people know where that is. So grew up, went to undergrad school at Jacksonville State. Wanted to be a lawyer. That was my aim in life. worked with lawyers all the way through high school and college because I was in the gifted program.
Mm-hmm.
And then in college, I took pre-law, political science. Went there, and I was going to go to Alabama to law school. And working with one of the lawyers I did, which was one of the biggest lawyers in the state of Alabama, I found out the dirty side of being a lawyer. It wasn't all, and again, there's great folks that are lawyers. I'm not going to knock everybody, but it was things that I just couldn't decide if I wanted to do, because either both sides, the defense lawyer or for the state, big negatives of things that sometimes you have to check your principles at the door. And I'm like, I don't think I could do that. So at that same time, I was really in with my church and all. And so I would like, hey, I'd like to maybe become a pastor. And so I changed. I went from the dark side to, I'm like, well, if I'm going to do that, I'm always I want to know everything about what I want to do. You know what I'm saying? I don't want to go in. There's things that I don't offer as an insurance person because I don't want to get into, because I haven't done it all my life. And I don't feel it's comfortable enough to, like, I don't do investments for people. Let's say, I could get a Series 6 or 63, but I haven't done that all my life. And I'm like, I don't want to trust, people to trust me with their life savings and invest it when I could figure it out, but that's not like what I am.
You want them to get the best.
I want them to get the best of what it is. And so I was like, okay, so I'll go to seminary. So I went and got my master's degree in Florida at Pensacola Theological Seminary and got a 4-year master's degree in theology. And so I was wanting to be a pastor, but then I grew up in a independent Baptist church where, independent small town Baptist church. Well, I wasn't married or nothing. And so when I got out of seminary, I was going to candidate in all these churches, and I'd go and preach, and they'd love me and all this thing. And then I'd be talking with the board or whatever, the deacon board and all this. And they'd be like, well, where's your wife at? And I'd be like, well, not married yet. And it was like, wow, the amazing how quick phone calls don't return, because
wow, yeah,
the perfect
they want a pair.
They want a pair. Yes, sir. And so I was like, I can understand why a little bit. But so during that time, my brother owned an insurance agency in Rome, Georgia. And he goes, hey, why don't you go take your test and you can work with me until you, find a church, whatever. And I said, cool. So I've been through 8 years of college. So I'm pretty good at taking tests. And so all it is a 40-hour course, and then you have to go take a test for the state of Georgia to pass the test to become an. So that took me about 30 minutes to do all that, and became an insurance agent. And here I am 30 years later.
Still selling.
Wow, fell into it. There you go.
Yeah, kind of fell into it and enjoyed it. And I mean, it was made pretty good money with it. And main thing, I just enjoyed it. I mean, I like dealing with people. I like helping people. And I like, when I feel like I've done the best thing for them, and then you'll see things that happen where like, hey, I was glad I took care of that guy. And I mean, quick short story. I had a guy that I had sold him on an umbrella, which I don't know if folks know what umbrella coverage is. It gives you extra $1 million or $2 million or whatever you want on top of all your liability coverage. Well, this cat, I suggested it to him because he used to be the president of a bank, retired. So I knew the cat had a couple of dollars laying around, and so it's $150 a year. Talked to him, hey, you need this because if this happens. Well, he finally took it. Then he wanted to cancel it 1 year. Oh, I don't really need all that. No, you really do. Just in case, well, it's like 2 years later, he hit a guy on a motorcycle and got sued for $1.7 million. Guess what? He had enough insurance coverage, so not a penny of it went after him. He didn't lose a thing that he owned. And so I'm sitting here going, yeah. It made me feel good because it was like, sure, if I had not suggested that and had not pushed him to keep it, he would have been in a real mess. And
you're going to love this, Mark, because you are speaking to someone in me who knows almost nothing about these topics.
Yeah.
And I'm sure a lot of our listeners.
And that's what brought us to getting Mark on. Not only does Mark, he's funny. We like Mark. Mark's a good guy, but he understands insurance and we don't. And especially, I mean, I'm 44 years old and he sold me several policies that have saved me a bunch of money. So there's that. But then kind of what we brought him on here to talk about is so many of us, Cassandra included, only have life insurance through my company. So if I lost my job today, I have no life insurance, right? And that's probably not great. So we wanted Mark to come on and kind of lead us down a path of what should you be thinking about when you think about employee benefits, and especially in regards to insurance. We're not talking about like health insurance here. We're talking about life insurance and all those accessory benefits that you get, along with your benefits package. But tell us kind of what we need to know about what is the, how do I word this? What do we need to know about life insurance? Go.
Go. I want to come back to again, you're 100% right. And that's one of my biggest frustrations and joys. And what I try to do is the fact of, don't feel bad. Nobody knows insurance probably. And I, just like I don't know tech stuff. I mean, I sit here and listen to you guys talk all the time, and I'm like, wow, I'm the dumbest man on the face of the earth. I'm like, I have no clue. I'm like, and it makes me mad. I was like, these ladies, they're pretty and they're smart and all this. And I'm like going, what did they just say? I'm sitting here Googling.
I knew I wanted you on the show.
You can't get me with that Southern charm. Okay. I'm sitting here Googling. I'm like, what did she just say? But anyway, I'm like, but when you talk to insurance about people, they just think insurance. I pay money, everything's covered. If I have a car wreck,
like it's that simple.
Covered. Yeah. If I hit a bus load of nuns, hey, it's covered. If whatever I do is covered, and I'm like going, oh no. And that's the hardest thing, because they won't cheap on everything. Because here's the thing, I work in the worst industry in the world. I'm asking you to pay me $200 or $300 a month for, say, car insurance. You hate me up front because you're paying $300 for something that you get no use out of, right? And if you do get use out of it, guess what? We're going to raise your insurance rate, right?
Right.
And the fact of it is, it's something you don't want to use. If it's ever something you use, it's a bad day. It ain't like, hey, hot dog, And so I've always told people, I said, I'd just love to go and sell ice cream cones at Disney World, right? Because you're talking about the joy there. I'm selling a $10 ice cream cone, way overpriced. But everybody is just happy as a pig in mud to get ice cream at Disney because it's hot and it's good. It's like, and it's like, but it's $10 a piece, dummy, right? I'm giving you something of value. You're giving you something that's going to make you fat, right? And so, but I was like, guess how much fun that would be just to sell an ice cream cone at Disney World, right? Everybody loves you. They're the ice cream guy,
right?
But anyway, but yes, the life insurance deal or insurance in period. For benefits, first of all, you hit the nail on the head. I mean, I don't know how old you are, 28, 27 is what you look like, 20.
And if they ask you, that's your answer.
Yes, sir.
That's my story, and I'm sticking to it.
In all seriousness, I turned 35 in 2 weeks.
Good job.
Boom.
Yeah.
Anyway,
I turned 36.
Winning at life.
But here's the thing is, statistically, you know how many times you'll change jobs in your lifetime?
Oh, no, I don't. How many?
I say 6.
Close.
Get out of my head.
7.
Stop it.
7
Look at
times.
us.
So if you're on time 2 or 3 or whatever, guess what? You've got 3 or 4 more times you're probably going to change the job. And if you do that, the next company may have good benefits. In today's world, probably not, because things are going downhill fast with benefit offerings because it's so expensive. So what happens is guess what? You may have taken this job when you're a lovely 23 or 24, and then you might take your next job when you're 31. Well, the time you take your 4th or 5th job, you might be 45 or 48. Well, guess what? Your insurance is not going to be as cheap at 48 to die as you were when you were 21. And so your rates are going to be higher, your accessibility, you're probably going to have picked up something along the way, diabetes or a little weight or something that's going to hurt your ratings and all. But now you might be looking for insurance at 45 years old, right? And you might still have another job or 2 that you're going to change. And here's the true story. I had a guy walk in my office one day, and first customer I ever had, I told him if he ever leaves me, I'm going to shut my doors and quit. But as a farmer's agent. And I have everything in the world he has. This cat was a vice president of sales for one of the carpet folk here in town. Their company shut down. They got bought acquiesced by another company from Canada. Okay. And of course, this happens all the time in those, big textile industry all the time. Well, guess what? He had an amazing benefits package. He got the equivalent job with the new company, offered no life insurance or anything like that.
Oh, dang.
This cat was 62 years old, walked in my office and wanted, hey, Mark, I need $1 million life insurance. And I chuckled at first. And then I was like, well, hot dog, I'm about to sell a big old policy, because he probably could afford it. But you realize, you know how much a month life insurance was? I think it ended up being going to be $300,000 to $500,000 because couldn't afford $1 million. Nobody could probably. But it was like $700 a month. And I think I had cut it down to like $300,000 even. And that was a term policy. Okay. And so, and again, I know one of the things, term policies are where you buy something that's going to run out.
Right? Yeah. We need to talk about the difference between term and okay.
But anyway, so the fact of it is now he was in a position that his back was against the wall, right? Mm-hmm. And he's got a policy today now that's going to last him. I was able to do some maneuvering and all, but it's $500 or $600 a month he's at that. But again, and it was because he had that through his company, was probably paying $4 a month or something like that for. But again, that don't always last. And the thing of it is like life insurance, when it don't last, you're trying to then find it on your own at an age that I don't have a good answer for you, dear. You see what I'm saying? Yeah. It's like, and because, people, and then people ask a dumb question. Well, that ain't fair. Why is the insurance company, they want to give you $1 million worth of coverage when you're 62 years old? You do realize you're going to die, correct?
Right.
And how long are you going to pay premium to them? Right. And they're going to cut you a check for $1 million.
Well, at the end of the day, it is a business. I mean, all businesses have to be in the business of making money. It's not a nonprofit.
Right.
I mean, unless you go with a mutual company that's paying out the profits and, dividends and whatever, then they need to make their money back or they're going to close their doors.
And it's today's society of where there's so much of, hey, the rich guys are rich and get them and whatever. And that's cool. And most insurance companies are ungodly rich. I mean, they have assets of billions and billions of dollars, which they have to be able to continue to sell insurance. The states require that. Okay. If not, then they won't let them sell it, because guess what? They have to be able to pay every claim that they have on the books in case they all happened at one time.
Right.
Imagine if you're farmers or a state farm. Farmers is the largest thing in California out there. Right? It's California. Right. All right. Yeah. So they have to be able to pay all their claims at one time, or the state says, hey, you can't operate here. So they have to have billions and billions of dollars in their pocket. And then, like I said, there was one of the companies that took 3 or 4 years ago, $15 billion loss in 1 year. Billion, that's with a B. Now, would you operate a company that you knew, hey, going into the year, man, I'm going to lose $15 billion. Now, we have $200 billion sitting in the bank, but 15, we can handle that. It's okay. We're not panicking yet, but let's do that 2 or 3 years in a row. Right? Yeah. And so it's like I tell people, I was like that back to my ice cream. If you're making an ice cream cone for $2 and selling it for $3, and all of a sudden it costs you $3.50 to make that ice cream cone, you're not going to sell it for $3 anymore. If you do, you're stupid. Right?
That's right.
But anyway, so that's the problem with is insurance, and and like home insurance is crazy right now, and it's because the loss ratio in the state of Georgia is so high. They're losing 40 to 30 to 40, 50 cents on the dollar for every dollar we bring in cost. So companies, when they insure you, they know, hey, we're about to lose a little bit of money. So
is it because the cost of replacement has gotten so high?
Replacement cost on homes has skyrocketed over the last. It started with COVID, of course, everything did.
Yeah.
And the cost used to, like I tell people, when I started in insurance, if you say, hey, how much is my home value? How much I needed insured, I could say how many square foot it is, 1,200, and I'd take that time $100. It was about $100 a square foot. $120,000. That's what we're going to probably need. Sure, I could run a cost estimator and it come up 128 or 130, 100, always right there. Then it jumped up to about $125, $130 a square foot. That was like 12, 13 years after I started in insurance. It jumped up to that kind of area. And it stayed that up until about 6 years ago. 125 to 35, according to how nice you have. It's builder's grade versus a more custom type home. 135 for now. Builder's grade is $180, $109 a square foot, and it's jumped that much in like 5 years. So
Yeah.
I've been telling you, I've been doing this for 30. We went from $100 a square foot to 125 and stayed there up for what 22, 23 years. And now we've went 40 to 50% more in a 5-year span. What do you think insurance companies has done? They run for the hills because they're like, where's this stop at? What's the next? So they're having to make up for losses and prepare for what if it stays at 180 or what if it goes to 200? What if it goes to 210? Right. So
and this is something good for everybody to look at, because like I know that you had us look at our homeowners policy because Mark insures all of our things. But everybody, if you've not looked at your homeowners policy in 4 or 5 years, you're probably not covered if you have a total loss. Like more than likely, you are underinsured. So you should definitely take a look at your policy.
That's actually a good segue into a question that I had for Mark, and I apologize. I don't mean to catch you off guard. This was not on our prep sheet, but what you were just taught, this whole thing brought something to my mind, which is, I'm going to be honest. I have mostly ignored the calls from my insurance agent. And so it kind of makes me think, right? Like you two have a really great relationship. And I think that rolls over into the trust you have for his opinion, the trust you have in that he's not just out to sell you something. He really tries. And so my question for you, Mark, is, if you were talking to other agents or brokers, how do you work to try to achieve that sort of relationship with your clients for them? I mean, like I have zero relationship with my agent. And that's why I think subconsciously in the back of my mind, I'm thinking this chick is just calling me because they review their policies every so often and there's an upsell opportunity. They want to call me. Now, hearing you talk about this and explain all this, I'm like, oh my God, I'm severely undercovered in most areas probably, right? I don't have a separate life insurance policy. There's probably things about our property that I need. Just air it all out, right? Like I am not covered. But like, but talking to you, I'm like, okay, we got to get into this thing. I need to be shelling out some dollars. But if she called me tomorrow and left me a message, I probably wouldn't have called her back. So how do you work on that? How do you get people to hear you?
Well, I mean, that's the biggest thing is the fact of answer the call and call me back or just answer the call, because here's the thing is most agents, good agents. And the problem is with the industry everywhere. I know you guys probably have folks in your industry that takes it to the gutter. They're there to make a dollar and do whatever. Like I joked about the other day with the AI thing, people's going to take it to the lowest common denominator, when she was talking about, hey, she could say a word and it would draw a picture and send schematics. I know folks in Alabama sitting there, what kind of dirty word can I say? Well, let's say what picture it draws from that. People's going to take it to the gutter. But a good agent, if I'm calling you, it's for a reason. And it's not just to sell you something. It's to like, hey, I see an issue that you might have. Like she was saying, Cassandra was saying, a lot of companies do an automatic 2, 4, or 6% increase annually on the valuation of your home. Okay. So we've already talked. Insurance has went up. I mean, the value of homes have went up tremendously. The rebuild, replace value has went up tremendously over 5 years. Well, if they're giving you an automatic tick of 4 to 6%, run that out over 6 to 8, 10 years, where your house should be at 480 now, you might be hanging around there at 360, 370, 380. There's a co-insurance clause issue, and I don't want to get so deep into insurance, but if you don't meet at least 80% of the value of your home, you don't get full replacement cost if you have a loss. And so, and I rate policies literally at least a couple a week, where I look at it and I'm like, there's no way this house you can replace it for X amount, right? You got 3,200 square foot and you got $2,800, 3,200 square foot, and you've got like it, where it's valued at like, you realize that's like at $98 a square foot. You're not replacing a porch for $98 a square foot. And so But yeah, it's the fact of we're calling you, and it's like me, is you've got to trust the agent to, if I am calling you, I'm not calling you to sell you a policy. You know, I asked Cassandra the other day, simply, I was like, hey, do you have life insurance? Because I know we do a lot of stuff. I know, she makes a couple good dollars with her job and all that. And when she said, yeah, I have it. And my first thought is, it's probably through her employer.
And he was right.
Again, and which is cool, but at least you got something. But again, with an insurance policy outside that, you own it. So guess what? If whoever you're working for dumps you, they can't dump your life insurance policy. You still got it. You ain't got to go look for another one.
So you lose that coverage anytime you don't work for that company, whether it's a layoff. Well, maybe with a layoff, that maybe they'll, depending on the package. But like if you leave on your own accord, you retire, or you are terminated, that doesn't follow you.
So like basically life insurance, it's gone.
So you could work for a company for 30 years and then retire.
According to the package they have, they may where they continue to offer it or whatever. But like I said, most of the time, like we said, we're not talking retirement. We're talking about you will change jobs yourself, or a forced change of job where they, whatever, it's 7 times. So, again, we're not even looking at the retirement thing. We're looking at the fact that you change jobs or are fired or whatever and get a new job and you're 49 years old or 53 years old. Your life insurance, you're not going to get near what you want for what you could come anywhere close to paying for.
Are there other types of coverage that folks usually rely on their employer for that they maybe shouldn't? Like, is life insurance the only one?
That's the biggie. I mean, there's like some long-term care, short-term care. Problem is, you get outside of the employer on that, it becomes kind of expensive. I mean, you can go poor with insurance. I mean, I'm honest, and that's you going back to you with the conversation. You got to be able to feel comfortable that I think Cassandra would admit. I'm not just calling her for everything. I've got multiple things that I could. I told her about some protection we offer for computers and all your household items and all that. And I knew the job that she does. I'm like, hey, she's probably got a lot of things, laptops and all this. And I'm like, this would fit her good. Now, I've got some other stuff that Farmers offers. I'm not calling about. We offer pet insurance. I've met her 2 dogs. She ain't going to want pet insurance on them. So I'm not going to hit her up for, and plus it's, not as great of a policy. I will undersell myself more than an oversell. I mean, perfect example. If you call me and you've got 4 cars and you got you and your spouse, okay, and you have all 4 of them have a rental reimbursement on it. My first question to you is, why do you have rental reimbursement on that? Oh, no, I will fuss with you to take it off of your policy before I'll say put it on it. And they'll be, well, they just put it on there from before. And I said, you know why they did? And I was like, why? I said, because they just wanted some extra money. Because if one of your cars is damaged in a claim, right, and they're having to replace it, you got 2 extra cars sitting around over in the parking lot. And you could drive one of those for a few days, right? Well, yeah. And so it's foolish to have it. So again, if you have the trust in your agent that they're going to do that for you, then anything I'm calling you about, I ain't sitting there just trying to sell you some stuff. It's for the best of you. And I hate when people, well, they call and get a quote somewhere else and they'll call me, I'm going to leave me. And I've had them for 8 years. And I'm not going, well, and they'll leave me for a company we have. We're Farmers, but we also offer some other carriers as well, Progressive and some other things. I'm like, well, we got them too.
Right.
I know that. And I'm like, well, why didn't you call me first? I mean, I've known you for 8 years. We're sitting like, but those are the ones that's hard. But yeah, you just, if you have that trust with them, that if they are calling you, it ain't for, hey, I'm just trying to make a buck off of Carry Me. It's for the fact of, hey, it's renewal. Look, you might be a little bit underinsured on your house. We need to look at this. Or, hey, I know the job you do. We got this new product, man. It covers all your electronics and $34 a month. If anything breaks down, it replaces it full, actual, at cost or like that. I mean, I can look over and say, wait a minute, they added 2 new cars this last year. They've done went nuts and just got 3 or 4 cars. And I'll call and say, hey, you might want to take off that rental reimbursement. You know what I'm saying? Because you're wasting money.
Right.
It's only $200 a year or whatever, but it's really a waste.
That's $200.
Yeah.
Yeah.
And every once in a while I'll get an answer like, I had one time, the guy's like, well, them 2 trucks I got, said both of them straight shift, and said, well, I can't drive a straight shift. And I'm like, okay, we're going to keep
That's
going
fair.
on there.
That's fair.
You know? And so, but and I'm sitting here going, wow, I'm sitting here arguing for the guy to take insurance coverage off. But it's like I said, not arguing to take it off, but he gave me the okay, this is the reason why. Then, hey, yeah, you should have it on there. But you just got 4 cars and it's sitting one over in the corner, and if that one was not there available, I could hop in that one and drive it for the next 6 months if I needed to. Okay,
right.
You really don't need the other thing.
I think the key to that whole entire thing, though, is exactly what Mark just said, Jeremy, is like you need to trust your agent. And if you don't trust your agent, you probably need to find another one that you can trust, because I know Mark personally, so of course I'm going to have more trust in him. I knew him personally before he was my agent, right? We go to church together. We play cards together on Friday nights, which we need to do again, by the way. It's been
really it's been a long time. I forgot how to play.
I know, we're going to have to restart. Anyway, but even though I've seen how he does with other customers, and I know that's how he is deep down, is he wants the best for you. And I will tell you this, if anybody has device protection on your cell phone plan, I was paying $40 a month to protect all my cell phones. I am now paying through this policy like $35 a month, and it covers all my cell phones, my laptops, my TVs, all the things. If something breaks, you just put in a little thing. I mean, my son's phone broke. They sent me a new phone the next day. It's worth its weight in gold. It saved me money, and I have more protection. So anyway,
and I have the perfect idea for that. And the reason I'm so hip on this is that device protection, you get replaced at today's value. My wife had a 7-year-old, you guys are techie folk, 7-year-old Surface Pro laptop. Okay.
Old.
It just quit running. It just quit holding the charge. Wouldn't charge at all. But 3 days after I submitted the claim, I had a electronic gift card, $1,801 show up in my account.
7-year-old Surface Pro.
7-year-old. But now here was the thing. It was that $1,900 what they valued at of today's market value. $99 deductible because it was above a certain limit. There's the highest deductible is $99 on whatever you return back. So she got $1,801 for a 7-year-old Surface Pro laptop, and now she's a proud owner of a Mac Pro something, whatever.
Yeah, welcome to the light.
There you go.
When she went through, that's when I was like, wait a minute, I totally need this device protection. And when it ended up saving me money, I was like,
wow.
I mean, there's some limits to it. I mean, it's $3,000 a year maximum limit, blah, blah, blah. But again, if you have, I've used it twice. One of my TVs went out. It wasn't worth but $300. It was a cheapo TV. Got $300 minus $50 or whatever, deductible $49. So I got $51 back. But it's a great product. And like I said, and the whole thing of it, I was like her. I was paying $50 a month. I have an office plan for my cell phones, and $50 a month. Mine went down. I'm paying $34.99 a month. I'm saving $15 a month. Got all my cell phones and all my other junk, which I've already made $2,000 off back of stuff off of that. So anyway, yeah, that's a great plan. Anybody out there needs that. But
we'll link Mark's information if anybody wants to talk to an insurance agent that actually has a conscience and doesn't want to just upsell you. We'll link Mark's information so that
I could make a whole lot more money if I didn't have a conscience.
Yeah,
I told you that's how I got in insurance anyways, because I had a conscience. I should be a lawyer right now. Okay.
Yeah.
But well, you was asking earlier on the life insurance term and whole life. Term is you buy a specific amount of time. Okay. So 10-year, 20-year, 30-year. And of course, imagine that's going to be cheaper, right? Because you're only buying a certain period of time. So the insurance companies can sway their losses pretty easy. They're really smart of knowing when people's going to die. And so they have these actuaries that are really nerds that are sitting around figuring out these numbers of when folks are going to die. So if you buy a 10-year plan, you can get like a lot of insurance for really cheap because you're probably not ever going to use it. You're just going to give them 10 years worth of premium. They're going to say thank you. They're going to invest your money for you. And they 1 out of 1,000, they're going to have to pay back whatever it is. Now, as the higher the term goes, of course, the higher the premium, but it's still going to be inexpensive because they can pretty easily figure out how much we're going to pay out and how much we're going to bring in through this period of time. Then they have what's called a whole life, or there's IULs. There's different policies in that form. All that means is as long as you pay that premium, you're going to, when you die, that face value is going to get paid out or more. And some of them gross face values like IULs and some stuff like that. So once you hook into them, right, as long as you pay that premium, if you're 102 years old, well, after 100, most of them quit and you actually get all your money back. That's a whole different story. But anyway, so once you hook into them, you pay that same price for your entire life. And as long as you don't ever not pay that premium, you will get that death benefit. Now, so those are the ones that's good for when you're young.
Right. When it's cheap.
Even kids. Her son has one that actually can build cash value out through their whole life. And guess what? It ain't ever going to be cheaper than even if you're 2 years old, right? Or 10 years old or 20, it's going, never going to be cheaper. And you start then and paying that $50, $70, whatever a month, get you $400,000 or $500,000 of coverage, whatever you want. Guess what? When you're 68 years old, you still got the same exact price of as you was when you're 21, and you still got now go at 51 and try to buy that $400,000 worth of coverage. We done told you a while ago, the guy's paying $700 a month, and that was for a term type issue. That wasn't even anything special. So you younger the better. That's rule one. Okay, especially if you get a whole life type policy, and you got to think of even for the terms. Okay. Like somebody's 23 years old. Are they knocking back as much money as you guys are or me? Probably not.
No.
Because they're just starting out in their career, right?
Yeah.
Eventually they'll get to where we're, making more, or you've made more money and you've got more assets and stuff. So during that period of what we call growth of your income and growth of your money, let's just say you and your wife and you have a little kid or two little kids, and you're 24 years old and you just buy your first house and it's all wine and roses and everybody's smiling. Well, let's say the husband or the wife, either one, makes $120 a year and the other one makes 40 or 50. Or maybe one of them has a super nice job and the other one even don't work, stays at home with the kids, or works a little part-time job just to get out of the house. If that one that's making the money dies unexpectedly,
Lord forbid,
give it about 3 to 4 months. The other one is sitting on the side of the road with a foreclosure sign behind their house, with their two little peepholes under their arm and all of their stuff around them, with the sheriff's department kicking them out of the house. Because guess what?
Yeah.
The company that holds your mortgage does not care that the spouse died. They just want their money or their house back. End of story.
Right. So
you don't have the money to pay for that house right now because you just started out in your career, right? Well, guess what? Go get you a $500,000 life policy, right? 10-year term, 20-year term, whatever, 30. That while you're building that income, right, you can pay $20, $30 a month for a $500,000 worth of coverage because you're 22 years old, super fit. And unless you get hit by a bus, you probably ain't gonna die. Okay,
right.
So you can get really cheap insurance for a bunch of money, a bunch of face value for cheap. And then that way, if something happened to you during that period of time, then guess what?
Your family's covered.
And your family's has the house paid off. You got somewhere for that loved one and the 2 kids that they're going to be at, right? And they got money to put them kids in college if they, at the end of that term. If when you died that you've taken care of them the best of your ability. And I had a buddy of mine who was over life for farmers insurance at one time. He gave me this, and it stuck with me, and it sticks with me today. And the reason I'm passionate about life insurance, he says, I want to make it where, he says, if something like that happens, whatever, you have the choices in your life, and choices are not made for you.
Right.
Well, that hit me hard. And he said, especially, I'm not being sexist or anything, but especially for females. He said, many times I've seen females put in bad positions where they've had to hook on to somebody that would just take care of them because they've had a spouse that died. And he said, the next thing you know, they're in an abusive relationship. They're in something like that because you know what? At that period of time, they wasn't even finished grieving yet. They just found something that was going to give them security. And he said, every day, he goes, when I write life insurance, he said, my goal is to make sure that if something happens to the loved one, that they have the ability to make their choices and not choices made for them. He says, you take that with you. And he goes, I promise you, it'll give you a whole different outlook on life about selling life insurance. He goes, because it's all about giving people the power to have control over their own choices and their own life, no matter what happens. And you're not going to have to just run off and for the first thing that comes along, And I said, and that stuck with me. And, and either way, it don't matter if it's the man, the woman, or whatever, whoever the breadwinner is, if the main one, now, fortunately, maybe both of them's the same level or whatever.
Right.
But if there is one that there is a big equity difference, the one that has the big one taken away, there's a problem
That's
with
tough.
the other one that's left. And so, but now there's even Farmers has a great product. Listen to this, with the term deal that you can actually get your money back at the end of the term. It's called a return of premium life insurance term policy. That you can take a 30-year policy. Let's say you take it out when you're 22 years old, get you a big old amount, maybe $500,000, $1 million or whatever. And instead of paying that $30 or $40, $20, $30 a month, you might pay $70 or $80 a month. It's going to be a little more. But at the end of that 30 years, you're going to win either way. You're going to have died, win, and your family's is going to have gotten the face value. Yeah, that's the way. The face value which you bought, or you're going to get 90% of the premium you paid over that 30 years returned to you in a tax-free check.
Tax-free. You said it.
Tax-free. Yes. But here's the thing. So you just do the math, and let's just say you paid over those years $25,000 over 30 years of time. Okay. And at the end of that time, you're going to get 90% of that $25,000 back. I don't have my calculator, but let's just say that's $21,000 is 90%. So you're going to get a check back for $21,000 if you got it when you're 22, so 32, 42, 52. So at 50 to 30, 32, 40, 52. So at 52, you're going to get a $22,000 check back, tax-free. Just here, have some money back. And guess what? You then can either turn around and get more life insurance if you need to or whatever. But what we're going to do is try to get some kind of whole life on top of that to bundle it together. You can have more than one life insurance policy. But the thing of it is then you do the math of it over 30 years, you paid $3,000 for your life insurance. Break that down by 30 years, it ends up where you end up paying like, oh, wow, I paid like $80 a year for my life insurance, right? Yeah. And during that period of 30 years, if you would have died, you'd had 500,000, million, whatever you bought. And then you do the math, and it's like, wow, once I get my money back over that 30 years, I paid, nothing. $14 a month, the price of two of our Starbucks we talked about,
Right, exactly.
So that's a cool product there. So it gives you that cheaper cost of the life being a term and the benefit of, hey, here's your money back at the end of it. You get 9% of it. We played with your money the whole last 30 years and made a whole bunch of money off of it.
Well, I think the moral of the story here is there's a lot to be learned. This is an onion, and there's a lot of layers to peel back. Connect with your agent.
Yes.
Try to build a trusting relationship with your agent. Mark, we're going to have you back on because I myself have a lot of questions that we don't have time for. I can't even imagine how many questions we're going to have from the listeners.
Let me give you one more. I know we're got to get going. The minimum state limit liability, if you have that on your auto insurance, please.
Oh, gosh, yeah.
Oh, gosh.
I know people in my life.
Insurance agent, call me, call somebody, I don't care, because today's society, all that's required in the state of Georgia, you have 25,000 / 50,000 / 25,000 of liability coverage.
That's nothing.
If you hit me, my truck's 15 years. I mean, what's it? 15? Yeah, it's 10 years old. It's still worth more than $25,000 of actual cash value. You find a car out there that's with less than 5, 6, 7 years old, right? Mm-hmm. If you total one of theirs, they ain't a one of those that's under $25,000. And then the big thing, of course, is your health. I mean, medical. $25,000 of medical per person. You know how far that gets you to hospital?
You bumped your
Mercy
head
room
and you got
visit.
an X-ray.
A emergency room visit with a couple X-rays, and hope to God that that's all. They ain't nothing actually wrong, right?
That's right.
And guess
That's
what?
right.
If that's the coverage you carry and you go over those limits, you know what's going to happen. My uninsured motorist, which I have a 250, 500,000 with $1 million umbrella, is going to pay the rest of everything that's owed to me, and then you're going to get sued by farmers, not me. Guess what? Insurance companies are really good at suing people to get their money back if they've paid in your behalf. So that's a quickie there. And like I said, we need to get back. That's the one I was wanting to get back to. Of that's the dangerous thing of don't think, hey, I've got insurance. I paid my money. I pay my $80 a month. I got that 25, 50, 25. You ain't got it there. Those are limits to what you buy. Let's just put it.
It's like everything is being an adult. Educate yourself. We don't all have to be experts in everything, but take control of your life. Educate yourself as much as you can about these things.
And if you have more questions about insurance, we will link Mark's information if you want to call Mark. If not, call your own insurance agent. You absolutely can. If you want to ask more questions of Mark, send us a message, post it on our socials. We'll keep up with them. We'll have Mark on again and we can talk more things about insurance. Mark,
I know that's
thank
so
you
interesting.
so much. It really is, because people that are our age have never really been educated about this.
Yep.
So this is our way to educate all of us together about insurance and just all the things that we don't know. So, Mark, thank you so much for joining us this morning. This has been fantastic. Caramy, take us home.
All right. Big thanks to Mark Irwin for joining us and sharing such an important perspective on protection, stability, and planning beyond the paycheck. One of the biggest takeaways from this conversation is that a lot of people assume they're covered until life changes and they realize just how much of their safety net was tied to their employer. We loved digging into the human side of insurance, financial security, and what it really means to prepare for the unexpected. Mark, it truly was a pleasure having you with us, and you're welcome back anytime. As always, thank you guys for hanging out with us.
Don't forget. Great. I listen to you guys, and I mean, literally, I tell Cassandra all the time. I said, "You guys are truly like funny, man."
Thank you.
Yeah.
Well,
don't kind of dumb too.
Don't forget to follow, rate, and subscribe wherever you get your podcasts, and connect with us on socials at Coffee Meets Cloud. We hope to see you guys next week, and until then, keep your coffee strong. Bye guys.